Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, October 19th, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a financial advisor. I cannot give you financial advice. This is for informational purposes only. Please do your own due diligence. It's your money. It's your responsibility. Okay, so big news this week in two themes that we're very positive on over here at Actionable Intelligence, and that is uranium and gold. Both basically went nuts this week. I shouldn't just say gold, precious metals in general. So let's start with uranium, right? So basically the theme this week is over the last several weeks has been, basically AI data centers and big tech going what I call all in on nuclear. Now, obviously, nuclear power plants aren't just going to pop up tomorrow all over the place. I think Doomberg has talked about this as natural gas being the bridge to nuclear. Obviously, any kind of increased electricity needs for base load will probably be met with natural gas-fired power plants, cogeneration plants. But longer term, nuclear seems to be the solution. And so what we're seeing is basically bringing back plants that were shut down or mothballed. And I think another situation that's being not paid attention to is there's a guy, I believe his name is Mark Nelson. He's a nuclear power advocate. He's on Twitter or X. And he basically was on CNBC and he reminded the viewers of something that I hadn't thought about in a while, is that during the big build out of nuclear power in the United States in the late 70s, early 80s, there were sites where they had completed a reactor or two reactors, but the site had been permitted for multiple reactors, but the reactors were not built because of the hysteria around 3 Mile Island and basically the shelving of the nuclear build out. And so that's going to be another opportunity for, I think, moving nuclear forward, because a lot of these places are already permitted, sited. The local community has decades of experience with the existing plants. Many of the people in the surrounding community work there, so there won't necessarily be a big pushback. Not only that, I mean, look what you've got behind nuclear now. You've got basically the federal government, okay, even the Biden administration. Both sides of the aisle are pro-nuclear now. You have the big banks. We reported on this a few weeks ago. Banks with $14 trillion in assets are prepared to finance these things now. I'm just making high-level comments now. I'm not getting into the weeds. And now you have big tech going all in. So, I mean, these are really who makes policy, right? Big money, big banks, big tech makes policy. So here's a few comments from U.S. funds this week. This is where these blurbs came from, just to remind. I had to remind myself because there were so many announcements I couldn't keep track of them all. So basically, Amazon signed agreements to support the construction of several new small modular reactors in the Pacific Northwest. These reactors, owned and operated by Energy Northwest, will eventually generate enough power to serve the needs of over 770,000 U.S. homes. And Google announced a partnership with Kairos Power to bring 500 megawatts of SMRs online by 2035. And of course, we know about the Microsoft announcement, which was a couple weeks ago. I think that kind of kicked off this whole thing, is partnering with Constellation Energy to revive the 3 Mile Island nuclear plant. I think a lot of these announcements came, I believe, if I'm not mistaken, there was a symposium or a meeting in DC with a lot of the tech companies and the federal government, maybe several weeks ago or a month ago, I can't remember, I believe, and this is what they were talking about. And so here you go. It's coming out. Again, individually, does any one of these announcements make a big difference? No, we already were in the midst of a uranium bull market because of the existing supply-demand deficits just with the existing reactors. And then we just keep adding more reactors. Now we add this. Now we have this basically partnership, private-public partnership, which I discussed over the years would eventually happen. And so here we are. And, a couple months ago, the whole industry was in the investing community around uranium was in the midst of despair and depression because, throwing in the towel, swearing off the uranium stocks, and now we're at all-time highs, at least if you measure from like URA, the ETF. So this is big news to my mind. This isn't the only news, though, for uranium this week. It's a chart. We will make nuclear generation expected to reach a new record high next year. You see now the forecast. It's been basically stagnant for 30 years, and now you see the growth. And where's most of the growth coming from? China and India. Okay, and look at how small India is. I mean, they're going to massively grow their program over the decades. I mean, other Asian countries are going to. Japan's turning. I think there was an announcement in Japan this week for they're starting more reactors are being approved for restart. So it's back. It's here. You buy the dips. We're in a bull market. I said that. I've been saying that for years. People try to trade this thing. I don't think that's the best way to do it. Would I be buying now? No. I mean, now all the sentiment has changed and they ran the stocks up. So your chance to buy on the cheap was a couple weeks ago. Do I think you could still go in and buy, dollar cost average into, the Sprott Uranium Trust? That's probably a good idea. Or there was a time, I think a couple weeks ago, or maybe a month or two ago, I think it was selling at like a 13 or 15% discount. So you're able to buy, and now the discount's closed and they're issuing shares and buying more uranium, that being the ETF. So, this schizophrenic, you can't be like that, guys. This is a bull market. You get your position. If you want to try to trade around it, I guess that's you. But I've noticed that, there's a lot more, the sentiment shifted. There's a lot more bullishness back. So would I run out and buy on Monday? Probably not. But look for opportunities. It won't be the last time that we have a pullback in these stocks. Okay. And so again, the news just continues to get better. And I don't think, until I see, again, I've talked about this many times, until I see big, huge mining companies like Rio Tinto, or BHP, or Glencore, people, Lundin, saying they're going to get involved and spend billions of dollars building these things, or Cameco announcing they're going to do something. I just don't see where the uranium's coming from. No one is committing to building these new reactors or new uranium supplies. And we've already talked about the timeline to build a mine, right? 12 to 15 years. I am still sticking by my prediction that their musical chairs will happen and some Western utility is going to be left short uranium because basically China and the other countries are vacuuming up and locking up the uranium that's available. Yes, there's going to be opportunity in these brownfield projects that are being brought back online here in the US. But again, that's just going to be incremental increases. They don't have the capital. And if they did, it would still take years to get everything cranked back up again. Remember, at one point, I believe in the 80s, you can go back on the DOE website or EIA website, I think, and look up the historical data, but I think I did it once. At one point, the United States produced 40 million pounds of uranium a year. And I think last year we were around, it wasn't that much, less than a million or around a million, something like that. And that's ramping up. Obviously, we know that, but this is going to take time and a lot of capital. And again, we keep seeing what are going to be some of the impediments. Not just money, not just time, personnel. This is an industry that has basically been left to die. It was basically being picked over. Many people have aged out, retired. Where are the new people that are going to work? I mean, one of the companies I remember, UR Energy, a press release a few months ago where they were talking about trying to bring this new mine on. They're trying to bring, I think it's an ISR mine. And what was one of the things that was keeping them from being able to get this done timely? Lack of qualified personnel. It's the same thing we saw with another developer down here in South Texas, not developer, but Encore. Lack of drilling rigs, right? Qualified people to run the drilling rigs to make the wells, the ISR wells. So this is going to take longer. And obviously, every day that goes by, we're burning uranium in reactors. We're putting new reactors online month after month, but we're not growing the supply of uranium at the requisite amount. So this is going to be a problem. And so I think that, we're now, I think, in the bull market. We were in the early adopter phase when just a few of us were talking about this. Then we got retail interest. We had the first run up. Now we had a pullback for a couple of years where nothing really happened. People were getting discouraged. Yet the spot price was creeping up. We had the move to over $100 spot during the invasion of Ukraine, pulled back. But now I think we're in the media attention stage. This is when more money is going to come into this now. The story's getting out about the supply demand deficit, the basically endorsement, if you will, of the industry by governments, banking, and now the tech leaders, and they have hundreds of billions of dollars. So I foresee more and more announcements. Don't be shocked if you see more and more announcements about the DOE or the federal government partnering with these various tech companies. They have hundreds of billions of dollars on their balance sheet. So they'll be looking to accelerate this, I think, at some point. That would be my view. And again, you're seeing like the restarts in Japan. You're seeing the CDU, CSU coalition in Germany that's probably going to win the next German election, the federal level next year, I believe the election is. They're talking about bringing back the remaining reactors that haven't started being disassembled yet in Germany. I mean, this is the future. And I think you just have to be patient and buy on the dips. Don't go out on Monday, because that's probably what some people did. They're going to be disappointed. They went out and blew their wad at the highs in the last week, went all in, and they didn't have a position. And now, when they should have been buying 2-3 months ago, when we were in the throes of despair and depression around sentiment. So now sentiment has swelled and gotten extremely positive. And so I think that if you don't have a position, I think you can dollar cost average into something slowly, because you don't know what's going to happen. I don't think you keep going straight up. Who knows? Typically, though, these things, are cyclical, right? They're going to get into periods of short-term overvaluation, correct? Then more money comes in, that makes a new high. That's how this works, right? Stair step. So I'd be looking to put capital on the next pullback if you don't have a position, or like I said, just dollar cost average into the Sprott Uranium Trust and just buy physical uranium whenever it's at a discount to the net asset value, because you can't go wrong just owning the uranium. That's what you're doing when you buy the Sprott Trust. So those are some ideas, but this is amazing how fast I think this is an example of how fast sentiment can change in some of these resource markets. Again, we're in a tremendous bull market, and sentiment's going to swing and get very, very feverish and then get very, very depressed. And then you just have to be able to recognize that with the overall holistic view that we're long-term bull market for this uranium. So again, here's the URA. This is from Uranium Insider. URA, which is an ETF, ended the week with its highest weekly close in a decade and with its second highest weekly volume ever. So that's pretty bullish. You see basically back in late August, September, when everybody was getting very, very depressed, and now we're up tremendously from that. Basically, things get overbought and then they correct and then they move higher. This is how markets work. So anyway, thought that was interesting. I think this is something people need to pay attention to. China is on a feverish build schedule of reactors, and they're looking in November, I think, to sign what I saw in the news here. Kazatomprom plans to supply uranium to China worth more than 1 trillion tenge. That's about $2.5 billion. It's a major supply deal with Kazatomprom China. So again, with everything's moving from the west to the east, right? The gold, economic power, political power, geopolitical power, and now, uranium. And this is why I think that the West is going to get caught napping. I think it says here further down in the little bit of the part of this article, an agreement between the parties has already been reached, but the issue of concluding the deal was brought up at a meeting since, according to the legislation of the Republic of Kazakhstan, it must be approved by shareholders. This is the interesting sentence that I think you need to pay attention to when I'm talking about somebody's going to get caught short. The amount, they're talking about the amount of uranium involved here, is more than 50% of the total book value of assets, okay, for Kazatomprom. So China is locking up the uranium, right, that's available. And so we know Kazatomprom has struggled in its production. They're the biggest producer in the world. China is going to make a deal. This is the whole global South and East. This is what you're going to see more of this, right? You're going to see this kind of plays into my overall geopolitical theme also. I believe that the Russians were involved in this also, probably. Russia doesn't have a big supply of uranium. So they have a lot of processing capabilities, but not necessarily homegrown uranium supply. So you're going to see this is very, very geopolitically motivated. So this is why I think that we need to see billions and billions of dollars of investment come into the uranium sector, because we're going to see this continued bifurcation as the United States and the global hegemon tries to hang on. This is what you're going to see, right? You're going to see the global South and East do more and more business with each other, cutting out the European. I mean, Europeans are basically irrelevant this time. Does anybody care about Europe anymore? I mean, it's going to end up being a museum. I think Doug Casey said this like decades ago. It's going to end up being a museum for Chinese tourists, and also a place where they can hire nannies and butlers from. So I know that's tongue in cheek, but that seems to be what's happening, right? And then with all the other problems that are going on, there's sclerotic government, it's getting more and more authoritarian in the West. And, so I'm not going to go down that road. This is what we need to focus on. China, this is what they do. If they need a resource, they lock it down. They go out and they invest and they buy it up. They have the money, they have the ability. That's it. Wanted to talk about the other metal we're been bullish on. I've been talking about this for over a year. Basically, I became more and more bullish on gold as I noticed that more and more central banks were cutting rates and we were going to enter a new liquidity cycle. I think that's one of the primers, one of the pushes behind gold, because if you look at gold and basically different currencies, and Ronnie Stoiffel's shop does a good job on this in their monthly Gold Compass and in Gold We Trust yearly publication, showing the returns on gold in various currencies. And I think the gold performance that was the lowest performance was like 17% in one of the currencies. They have a chart that shows like 20 currencies in the developed market. They're all up double digit, and the same thing in the emerging markets. Why? Because we have tremendous amounts of debt around the world, and these governments are all printing money. Doesn't necessarily mean that you're getting wealthier by buying gold. You're just seeing the depreciation of those paper currencies. Okay, and so this is what we see here. People are starting to recognize what's going on. It's something I keep pointing out. If you recall, during this circus debate that these two candidates in the U.S. had, nobody talked about the deficits or the debt. That used to be a topic of conversation. At least it was given lip service. It wasn't even brought up, because both of these people are MMTers. They're both going to spend money. Neither one of them has any knowledge or care about any of this, because everything's based on the 2 and 4 year political cycle, and you're not going to solve a problem that's decades. It's set in stone now, and people can see it. Okay, and so not only that, that's one facet I think that's driving this higher. The other facet is the disgorgement of the US dollar around the world by various countries that used to keep it as a reserve asset via treasuries. Uh, you know, again, I've talked about it before. The stupid decision to kick a major superpower out of the SWIFT system and do all these things he did sent a clear message to everyone else that the U.S. was going to use its currency and its fading power in the financial markets to try to, bully the rest of the world into what it wanted. And so I think that's another thing. You're just seeing more and more announcements of more and more central bank buying of gold, particularly global South and East, and the continued slow decline of treasuries, US dollar denominated treasuries as reserve assets. You're just seeing more and more of that. So I think this is going to continue. And then what happens then, again, now you get into the thing where this is making new highs. It's starting to get media attention. You're starting to get a flywheel that's going to affect FOMO effect. Oh, gold, that's a place where I can make money. Okay. And so you start to see more interest come in. Now, again, gold made a new high this week. It's overbought. I wouldn't rush out and buy it on Monday. It's currently short-term overbought. The gold stocks have started to move. Some of the larger gold stocks have moved fairly well. There's been some juniors that have moved, but we haven't seen that full-on bull market that we are eventually probably going to see. So again, I've said this before, based on the previous gold bull markets I've participated in. The large cap miners will be the first to move. That's what started to happen. Then eventually you'll move down to the lower market cap, mid cap, and then into the, you'll get into a speculative frenzy at the end. We're going to hit that eventually. It's not going to be in the next week or so, but I would put together, if you're interested, start putting together a list of companies you may want to own, and you might want to start taking some positions. This is going to continue. I believe that regardless of who's elected, you're going to, we have the entire world. I didn't put the chart up this year, but the IMF came out with a blurb this week that was in the press. I talk over $300 trillion in government debt worldwide. IMF came out with a blurb that said that's probably underestimated. So there's no way out here except for money printing. There's going to create more currency units. And you have to own, this is why I'm talking about tangible assets. This is why you have to own things that can't be just created by pushing a button on a laptop. Okay. This goes back to the Cantillon effect. Be as close to the creator of money as possible. I don't say this to be hyperbolic, but if you don't own any assets, I mean, this is why you have the wealth gap that you have, because most people don't own any assets, so they're not able to take advantage of the money printing. And understanding that what Cantillon said, that when money's created, you don't know exactly where it's going to go. And so it's going to flow into something, into various asset classes, and then eventually trickle down. What the wage earner sees, what the schlub and the bleacher bum and shoe clerk see, is the price rises that inevitably happen because of the money creation. Okay. And this is why you have to be in the game. This is why Charlie Munger said you got to put that grub stake together. No matter how hard it is, you've got to do it because you have to be in the game. Before it was just because of wealth creation. You wanted to create wealth for various reasons, to send your kid to college. This is going to be a point to survival type thing. You're either going to be somebody that gets it and participates and makes it through, or you're going to be a Russian serf that doesn't own anything, struggles, and has a very unhappy life. That's where society's moving towards until they overturn this monetary system. These are the rules. I don't make them. I don't think that they're godly. I don't think that they're economically sane. I don't think that they're morally correct, but this is the game that's played, creating money out of thin air to benefit asset class holders is wrong. We should have, in a gold-based society, or a something like with Bitcoin, that are deflationary type currencies, right? Or with the case of gold, it only increases about between 0.5 and 1% a year. It can't be hyperinflated. Your value, your labor goes up in value. You should have a slight disinflation over time. But asset holders don't like that, right? And that's not how you can take on massive debt. Okay. And so we have to have this, somehow we've inculcated the idea that we need to have a 2% inflation rate. No, we should have a sound currency, okay, that's based on something like gold. And everybody says, well, that won't work. It worked for 5,000 years until we financialized the economy over the last 50 years. So don't tell me it won't work. It's not to the benefit of the ruling classes, because they can't then deficit spend and have wars and give money away and steal and strip mine the rest of the country. Yeah, that's exactly correct. But it doesn't matter for me ranting about this. It's not going to change anytime soon until the whole thing collapses, and then there's no other choice. And then it still probably won't change, because we've seen reserve currencies come and go, and human nature doesn't change. There's a certain amount of the population that are sociopaths and psychopaths that get drawn to wanting to rule over others. Until you change that, until you realize that, until you accept that, and you don't, these people should all be shunned. Nobody should even vote at all. Nobody should participate in the system. You think you're going to change something? Nothing's going to change. The deficits are going to go up. The debt's going to go up. That's it. Okay, until it doesn't have any more, and then you're going to have a currency crisis at some point, and that's it. So you can, people do this stuff because they have no other outlet for their frustration and their anxiety and all this. And some people still cling to vestiges of fifth grade social studies and learning about the founding fathers until they go to Washington, D.C. and then look at the inside at the paintings, and they all have Masonic aprons on, but that's a whole nother story. But regardless, this is the game. Okay. It's set up this way, and you have to play it, or pick up your pieces and move overseas to someplace else. But these are other discussions that are not really viable for most people listening to this. So this is why precious metals, another reason why precious metals are doing well. This is why you have to be in various tangible assets. Okay. This is why owning energy, looking at energy holistically and finding places where, because this is what does well in these inflations. And inflation's not price rising. Price rises are consequent of the inflation. The inflation is the creation of the currency units. So this is it. And again, you have to look at your own self. Everybody has to look at their self, because collectively, we don't want any pain. We don't want any hardship in our life. That's why the government responds by trying to not have severe recessions and a lot of unemployment and things like that, and having creative destruction, which is necessary to keep the, it's the same thing with, forest management. If you don't do periodic burns, controlled burns, if you don't keep underbrush under control, it builds up over time, and then you have a massive fire. It's the same thing in the financial markets. You don't let the market clear these bad investments and bad decisions and force consequences on people for bad decisions, and reallocate capital to more efficient endeavors. And so this rot builds up. I think it's something I didn't put it in the charts this week, but I read an article this week. Something like over 50% of the Russell index is companies that are zombie companies. These things need to go away. They need to die. The people need to go find other jobs in productive industries, and the capital needs to be liquidated and reallocated to productive endeavors. But it's not allowed to happen because the people don't want any pain. They don't understand what's necessary. So this is how it is, because this is democracy. No politician's going to get elected by saying, hey, we got to balance the budget, and we can't be spending 7% of GDP deficit spending every year. It feels good as long as, everything's working. Eventually it won't work. And so this is the result. Here's silver. It has made a new 13-year high. It's breaking out. This has really the chance to really move a lot. I would suggest that you look at some silver miners and think about taking a position. Again, this is short-term overbought. You can see off the bottoms in mid-February at $22 basically. Now you've ran it up to 33, so that's a 50% move in, 7 or 8 months, something like that. So beware that if you jump in on Monday morning, you're probably buying a short-term top. So get your shopping list together, and on a pullback, that's when you should be looking to buy. Emerging producers that have the ability to translate their production into increasing cash flow as the silver price goes up. So I found this interesting. Prepare for some good earnings announcements for the various gold companies. Basically, this is the all-in sustaining cost margin. So at 27.50 or 27.40, whatever the gold price is now, you have, this is for the industry as a whole, you have basically an $881 margin if you take into consideration all-in sustaining costs. A lot of people just look at cash costs, but you have to look in all the costs that go in, sustaining capital, all the things that you have to look at, and not just the cash cost. Get that 1 ounce out of the ground. You have debt service, you have all these other things. And so we're at like record margins right now. So, that kind of goes to this other chart that I show. This is basically the average gold price, and this is basically your costs, right? All in costs. And you can see the big gap where the opportunity is. This is why mining can be very lucrative. All along this time, nothing was happening, right? This is why a lot of reasons why the gold stocks weren't really moving, because as the price of gold went up, so did mining costs. But now we're in a situation where the price is far exceeding the cost to mine. This gap is your margin. This is why the stocks will potentially have a bull market. And this is where the opportunity is, because they really haven't moved yet. And I think they will if the gold price, another thing that's positive for mining right now is the fact that oil prices are down significantly. They really haven't moved. They're they're really down last week because of the risk premium for this potential Israeli strike on Iran. Okay, I don't foresee Israel striking the oil facilities of Iran right 3 weeks before an election. I don't think that the Biden White House is going to go for that, but we'll see. Regardless, this is what you see. I mean, energy costs, energy inputs into mining are very huge, and most of that's diesel. So with the price of oil going down, diesel down, it increases your margins even more. So this is your opportunity right now. And I put this blurb up here because there's a lot of companies that are still struggling to make money. If you are a gold mining company and can't make money at these prices, shut your company down. So this gets back to what I was talking about why this money printing in our system is rigged against the wage earner, the common person, and why both of these candidates and this whole government system is against you, regardless. Okay. And basically, as men in the U.S. have experienced zero real income growth for half a century. Now, women have had growth in their earnings, but men have not. And so this is for many reasons: immigration, women entering the workforce, things like that. But a lot of this is also just, this printing of money, and you have this emphasis on the financialization of the economy and not, wagering. You've moved a lot of manufacturing out of the country. You've undermined the working classes of this country for decades. This is why immigration is my major issue. I'm not blaming the immigrant. If I was I've worked and lived in Central America for a while. I know the poverty that exists there. And if I was some uneducated Mayan in Guatemala, I would try to make my way to the US too, because I have it in my mind, it's the promised land, right? And even if I have to wash dishes in LA or whatever and jungle up with 10 other people in a 1-bedroom apartment, it's better than what I'm doing, basically down there. I've told the stories before. But we can't have the whole world come here. We have to solve our problems first. But the both parties have their own initiatives as to why they want this immigration, right? They want the Republican Party that's has the U.S. Chamber of Commerce. They want lower wages, okay, for business. The Democrats want to boost up population so that they can eventually turn these people into, they hope, Democratic voters and have one party state and stay in power like they are in California. So who advocates for the working person that's already here, okay, that's struggling? I don't want any immigration right now. I want the whole thing locked down until we solve our problem. We deal with our own inner city problems and our underclass, that we have a permanent underclass here in the US that we need to deal with. We don't need to import more of the world's peasant class and underclass to exacerbate the problem. That's why it's the only issue I care about. So people will disagree. People will say you're blaming the immigrant. I'm not blaming them. It's unfortunate. Christ said you will always have the poor with you. Um, I don't think the solution is bring, several billion people, poor people, to the United States. That's not going to work. You'll completely change the United States. It won't be what it was if we continually flood it with the peasant class and underclass of the world. It simply won't. So, many countries, if you want to immigrate there, you have to bring capital. This should be a privilege to be a U.S. citizen. What are you bringing here? Are you bringing your master's or PhD education? Are you bringing some level of capital here? What are you bringing to the table except that you're just here and you can cut lawns? I already have enough lawn service guys here. We don't need any more. We don't need any more dishwashers. People say, well, John, they showed a picture I saw the other day. People were picking lettuce in California. Americans won't do this. It's not a problem to have a worker visa program. I talked about the sugarcane industry that I saw in Florida before it became mechanized in the early 80s. They used to fly thousands of Haitian and Jamaican workers in for the season. They had it all set up. They had block houses for them to live in. They came in, they cut the cane manually. They used to cut the cane by hand, okay? They'd just burn the field, and then they would have these buses come out. These guys would get off. They would each of them get on a row, and they would just start going from dawn to dusk, cutting cane. And then machines would come and put the cane into these sugar babies, and they would take them and load them out to semis. Then they mechanized the industry, and that went away. They didn't emigrate here and live here forever. They came and worked during the season. Then they went home. They made a lot of scratch. They bought some things that they weren't available in their homeland, and then they went back and were with their families. What's the problem? We can't do that now? That's impossible? No, it's just political will. So I care about the existing population of Americans that is here, regardless of their class or race, okay? And we have a lot of people that are here struggling in the working classes, in the lower classes, and we don't need to bring the rest of the world here until we solve those problems. Now, people, that's just my opinion. And until that changes, people's wages are not going to go up. It's supply and demand. If you have an oversupply of cheap labor, and it's the same thing here right here in the Rio Grande Valley. Wages are very cheap here because people, there's an overabundance of cheap labor. I wanted to show this also that you need to be aware of if you're a wage earner and if you think you're insulated. So part of the problem with politics in the US is that the college educated suburbanite thinks he's better than everybody else. Not everybody, but a lot of them do, okay? And they're aloof. I'm more sophisticated. Well, your job's going to go away too because of AI. The business that you work for, the accounting department, or the company that you work for, they didn't hire you because they like you and they want to be friends with you. You fulfill a function that they have to pay a salary for. If they don't have any need of you, you're gone. Now, your immediate boss may be like, you might have developed a relationship with your coworkers and it might be friendly and you might actually be friends, but that's not why you're there. And if you think that these companies that are constantly under margin pressure and financial pressure at the higher levels in the C-suite are just going to keep you around when everybody else is transitioning to AI or more efficient ways of doing things, you're mistaken. And so I think your views are going to change too, but it may be too late. Now, I'm not a Luddite. This is going to happen regardless. Okay. This is why another reason why you have to be an asset owner, because these things are going to happen whether I like it or not, or whether you like it or not. So what's it say? It says between outsourcing to India and AI, this number will go close to zero. This is the number of accountants has fallen to 5-year lows. Total number of accountants and auditors in the US, you see how it's dropping because these things will become more and more automated. Same thing in the legal field. The AI now can write legal briefs. Okay. It will continue to advance to the point where you just get on something and ask it, hey, I got this this neighbor defense, and it'll know all the case law. It'll file the lawsuit for you. It probably will be able to argue it eventually, via like you go in there and there's like two talking heads like Max Headroom, AI lawyers arguing this case history, possibly to an AI judge. Who knows? I mean, that's not going to happen in the next year, but you could see the science fiction results. What do we need attorneys for? There might be, now the bar and these different associations that lobby might be able to slow it down a little bit, but this is where we're heading because it's cheaper. And so the need to get this friction, what economists call friction in the economy, where people, are able to charge for various services, this is going to go away with technology and AI. And a lot of people that are in the, thought they were above this all and, are, and quite frankly, look down on the working classes. Remember the word deplorables? A lot of the people that, higher net worth and upper middle class people in the Democratic Party that, Miss Clinton, this is the attitude a lot of people have. Not everybody, but they're going to be under assault too. So I just want to bring this up. I haven't, again, we're still in this bifurcated economy, if you will, of information that seems to be 50% positive, 50% negative. Here's the soft landing probability. It's a Bloomberg articles mentioning soft landing as a percent of monthly total. That's the new idea that, we may not have a recession, but because we'll have a soft landing. Again, with all the fiscal spending going on, I don't see how we have a recession. But how long can the fiscal spending continue before it becomes a problem? The Biden administration, I saw this week, there was an article, has spent $500 billion in additional spending in the last 3 weeks. And that's all deficit spending, $500 billion in the last 3 weeks. So, I don't know. I just find these things fascinating, these outliers. I don't think these should be ignored, but traditionally, these are the things that push me to think that we were going to have a recession, but the models are just broken, seem to be broken now, and the past history seems to be broken. So now we're in a rate cutting cycle. I don't know. I think it would be very hard with the fiscal spending we're having and the rate cutting that's going on to have a recession. So we'll see. Yeah, here it is. $500 billion was added to the national debt in just the last 3 weeks, $500 billion in 3 weeks. Front running the election, the government is out of control. This is another reason why gold's going higher. People are starting to see this. This is one of the reasons, not the only reason. Talked about that earlier. So this is now the most extreme on October 14th, according to John Hussman, who's, I like listening to him, but he's lost a lot of money, or he has had an opportunity cost being bearish. Basically the market has reached the most extreme level of valuation in history. And it can get even crazier because we're in this money creation now. We're in this liquidity cycle, and things are apt to get even stupider. Again, Cantillon, right? We don't know where that liquidity river is going to flow. Okay, we know from the past it can go into these different tangible assets. It seems to be doing that, but it also from previous history, we know goes into stock markets. And that looks like what's happening. And valuations don't matter. Again, this will continue till it can't continue anymore. This is interesting. I heard a couple of podcasts where Doomberg was talking about this. And so I dug up some charts, and he wasn't wrong, or they weren't wrong. Basically, has China reached peak oil demand? And on the left here, you have I think this is important because China is one of the major importers of oil in the world, right? So I think the question's worth asking. So you have basically China's LNG heavy duty truck sales are growing rapidly. So you see they've always had LNG truck sales, okay, as a percent of sales, but it's really went nuts the last couple of years, right? And even electric heavy duty trucks, that's something that we were supposed to see here in the US that's kind of not made it off the engineer's drawing board yet. And so heavy duty truck sales are going to, if they're running on LNG and electric, which is, now approximately a little bit more than 50% of the sales are LNG or electric, that's going to reduce the demand for diesel. And here's the chart on the right. China's electric truck market is picking up speed. Heavy and medium segment commercial electric vehicles, it's basically about 4% of the total now. Battery electric vehicles, plug-in hybrids, and fuel cell vehicles, getting close, about 4% of total sales. It seems to be increasing. So the Chinese like are all in on everything. They don't just try to like focus on one thing. They don't want to be stuck with just being reliant on oil from the Middle East, which they kind of are now. That's a problem for them. And that's why I think you're seeing this big push that you see on some of these other things. Why? They get a lot of, natural gas from Russia now. Power of Siberia pipeline. There's going to be more gas coming. I think there's a Power of Siberia 2 being implemented. Plus LNG exports are possible now from Eastern Russia. So Chinese are not really a major maritime power. And so as the United States continues to rattle sabers and consider them their main rival, China being US's main rival, and basically, even the CNO of the Navy, Chief of Naval Operations, talking about prepare for a war by 2027 with China. One of the choke points for oil is the Malacca Straits, as oil makes its way from the Middle East, Iran, around India, then through those Malacca Straits, which is a very tight area, which can be choked off in a conflict and basically starve China for oil. So it makes sense that they would increase, if they have, as Doomberg said in one of the podcasts, these hydrocarbons are kind of fungible, right? So if you can run your heavy duty trucks on LNG or electric, that seems, and you're building out your electric infrastructure with gas-fired power plants, renewables, and nuclear, which is what the Chinese are doing, that it makes sense, right? You're getting basically gas from Russia, which is basically inexhaustible currently. That's makes sense. So, you have the EIA, IEA all saying that we're going to reach peak oil demand here in the next couple of years. I'm not sure if that's going to be correct, just because of all the other countries. You still have a lot of the emerging markets, Africa, India, all these other places. I'm not really seeing this level of, in some places, none. It's just all diesel. They don't even have, a place like Nigeria, which is one of the fastest growing populations in the world, basically has to import, well, until recently, import refined products. So I don't really see like electric vehicles taking off in Nigeria anytime soon. So the OPEC has been a bit more optimistic about oil demand going forward. I mean, oil is going to be with us for decades and decades. I don't know when it's going to be peak demand. I really don't. It's impossible to know. However, you still do have depletion. you do still have growth and in demand. So, and these other entities are mostly part of that whole globalist agenda that wants to see oil and gas demand go away. And so they're more apt to have a bias towards an earlier peaking. So it's unable to know the answer, but I do think that this is an important factor, at least when it goes to China. Now, I did see another interview on Bloomberg Energy where they had a Chinese guy on their analyst, and he was talking about that this exact subject was brought up, and his view was that, okay, a lot of the low-hanging fruit for LNG conversion of the heavy truck fleet has been done, and that going forward will be more difficult because of distribution of gas and things like that. And so costs go up, right? And so then diesel again becomes competitive. This is all about cost, right? And so if things are cheaper, people are going to use it. Then again, as people don't forget about Javon's paradox, as the price of the oil goes down, the use will go up. Okay, it won't go down. So it makes it cheaper unless the government gets involved and just doesn't allow people to fly and things like that. So that's probably the governments in the West are trying to implement this stuff. I think there has already been and will continue to be pushback on this because that means lower standards of living, and people aren't really interested in that. I've said that all along, that once people actually understand that their standard of living needs to go down, then the interest and the cost goes up, then their interest level goes down. But this is an interesting metric. This is interesting. RMB, the renminbi, the Chinese currency has now quietly surpassed the US dollar as a dominant currency used in China trade. This is part of the whole shift that I've been talking about geopolitically, and another reason why the US is, wanting to. This is part of that shift that you see going on, right? You see the US dollar in decline by China in its trade, and the Chinese currency goes up in use. This is what you can expect to continue over time. And the US doesn't like this because there's less and less demand for the dollar, right? And here's a chart I think I've shown before. This is the major reserve currency since 1250 AD. You can see them all. They only last, a couple hundred years if you're lucky. And then they disappear and they're supplemented by a new reserve currency. So right now, currently the dollar is a reserve currency. I'm not saying it's going to end anytime soon. It probably won't. The United States has a lot of inertia. It's still a big deal. It still has a fairly large military I think is being exposed, though, as being more of a paper tiger. But again, I've said this before, I think the United States is in terminal decline for the same reasons that many of these other empires were in decline, right? Over spread out militaries, these military adventures cost a lot of money. The debt of the country is huge and growing. No one's talking about reining it in, and these are all negative for the viability of a currency long term. So we shall see. Another one bites the dust. Fisker declares bankruptcy. Electric vehicle maker Fisker filed for Chapter 11 bankruptcy protection, second electric startup to do so in the last year, as even industry leaders struggle to lure more buyers beyond the early adopters of the technology. I think the other company that went bankrupt was this Lordstown Motors, and this Rivian struggling also. So continues, quote, like other companies in the electric vehicle industry, we have faced various market and macroeconomic headwinds that have impacted our ability to operate efficiently, the company said in a prepared statement. After evaluating all options for our business, we determined that proceeding with the sale of our assets under Chapter 11 is the most viable path forward for the company. So again, we're still, the jury is out. I think that the Chinese have mastered the electric vehicle industry. If you are paying attention, shipping these things all over the world. But it doesn't seem to be working out too well here in the U.S. And then we have BMW says the EU ban on gasoline cars from 2035 is, quote, no longer realistic. Germany's car manufacturing giant BMW is warning that an EU ban on the sale of gasoline and diesel cars from 2035 is no longer realistic amid slow EV sales, as the European auto industry will see a massive shrinking with such a ban. European car makers are already struggling with their EV sales as subsidies in many countries are coming to an end, and Chinese low-cost vehicle makers are gaining market share. Just talked about that. The Chinese are going to dominate. They're getting into all of these industrial, they don't make, plastic doggy duty and, whoopee cushions anymore. They're basically taking over. They have an $80 billion a month trade surplus. So yes, you can talk about the real estate industry having the problems in China, which is true, and some of the other problems with their debt, but their manufacturing is taking over basically industry after industry after industry. Goes on here, the article, the current regulations will, with today's assumptions, lead to a massive shrinking of the industry as a whole. Yeah, this competition's one thing. The other is just the self-inflicted gunshot wounds, overregulation, high energy prices due to the stupidity of trying to take on Russia and blowing up your own pipeline. Just, a bunch of problems that can be solved, but probably won't be because they're too politically divisive. So we will see what happens. This is where I think you're seeing a lot of these other third parties now getting more and more traction in more and more countries in Europe, because people, again, have a sense that something's wrong and are rejecting, it's like Mario Draghi. He was commissioned by Ursula von der Leyen to come up with a report of EU competitiveness or whatever. And basically his answer was, well, the answer to the EU's problems is more EU. Of course, that's what he's going to say. No, the course of action you need radical chemotherapy and surgery. You need to get rid of all of these globalist centralized government. Doesn't work in Brussels. The countries need to be competitive with each other, and that will force competition. If you want to be a overregulated socialist state, then your people will be poor and they will emigrate to other places. If you want to cut taxes, cut regulation, like somebody like in the Republic of Georgia, what they've done after the Soviet Union fell, you'll have, ongoing 5 to 7% economic growth every year. And capital will flow in. I mean, it's not part of the EU, but I'm just giving you an example. It's on the periphery. But if you want to be part of the EU project, and most of the politicians do, because this is, gives them power and wealth, unearned power and wealth, and it doesn't benefit the majority of people, but they don't care about the majority of the people. Look at the policies. They're stupid. Who blows up their own pipeline to Russia for cheap energy and then closes down the nuclear reactors? It goes beyond dumb. It's sociopathic. It's like you're trying deliberately to hurt people. The purpose of government is to try to improve people's lives, not make them worse. And because the governments are making the majority of the people's lives worse, the people are reacting by getting more and more militant in their selections for representation. And of course, the establishment is reacting exactly as predicted. They want to clamp down on speech. They want to clamp down on these parties. They don't want any competition. But you won't be able to stop this, right? Again, it goes back to what Doug Casey said. You're either going to change or you're just going to become this, dusty museum for, the wealthy Chinese to visit and interview, butlers and nannies for back home. That's it. I thought this was interesting. It shows the political leanings, distribution of U.S. tech executives' political leanings inferred from their campaign contributions. So you see how in the last 2 election cycles, predominantly tech executives were really leaning to the Democrats, but that seems to have shifted in this election. You even had like somebody like Zuckerberg come out and say, I think he gave like $500 million last year, plus, or last election cycle, plus obviously Facebook clamped down, and you know what they did. But now you're seeing kind of a shift towards, you know, Republican side. So I find this interesting. We'll see what happens, but I didn't realize how much it had shifted over the years. Now it seems to be shifting back. This is why I don't get into this thing of like going to have these permanent majorities, and people aren't stupid. I mean, even in Argentina, 70 years of socialism didn't work, and so finally they threw it off and went with this Malay guy. The same thing has happened around the world in various countries. It doesn't always happen, but people, even dense people, are just like, I want some change. This isn't working. And so, the idea that we'll just, like I think that the Democrats have, let's just, even California has a bounty of oil and gas. It probably has oil and gas reserves that are equal to or greater than Texas, but they're just not allowed to be exploited because of the political environment there right now. And so the people that are there, that are in power, this is, they're still doing well because of the tech uh, industry, but the majority of the people that they've brought into the country to get that majority, are they doing well? And as people, get disappointed year after year after year, they're going to start wanting some change. And so, Phillips 66, I saw this week, is now going to close down one of their refineries in California. So what is California going to do? They're going to try to go all electric. It won't work. Or I don't know how all these people are going to, drive electric vehicles around. So in the meantime, the refining capacity closes down. The natural bounty of the oil and gas that you have will not be exploited. And so you import refined products from across the ocean, from Singapore and these other places in the East. Okay, that's good for the climate. Stupid, but whatever. Eventually these things, I think, go through these. It takes a while, but eventually these things seem to change once people, in the end, it goes back to what Hubert H. Humphrey said. People vote their pocketbook when they go into the voting booth. And here's another example, right? This is like example after example after example. But you have Stoops running everything. They don't know anything. Most of these politicians, like, I've never met a politician that wasn't a bum. That's just how they are. So I put it here as a slide. For the 100th time, capital goes where it's treated best. So basically, there was an article about this, but I just get this blurb from X summarizing. Norway wanted to increase tax revenue by 146 million. To achieve this, the wealth tax was raised. The result, however, was slightly different. Individuals worth $54 billion left the country. This led to 594 million less in wealth tax revenue. The net loss, $448 million. People aren't, unless you're going to lock a country down completely and not let anybody out and not let them move their capital and then seize it, that's the only way to seize capital. People are not going to stick around and be taxed to death. Why would they do that? Show me the incentives and I will tell you the outcome. I mean, this is all simple stuff, but these stupid politicians, they get, because this is what sells to the masses, right? Because people are envious. How does it affect your life if somebody made $1 billion in a tech company or some other way? It doesn't affect your life one way or another. What do you care? But this is the envy and jealousy that's manifested by these horrible politicians who created the problem in the first place with their stupid policies and their central banks. So this is part of the whole psychotic mind, screwing that you constantly are subjected to by the media. John's first rule, okay, of success in this world, material world, if you will. Turn off the TV. Turn that TV off. It's just misinformation and disinformation. It's just going to fill your head with a bunch of garbage. Okay, that's it for this week. we're getting closer to the election. We'll see what happens. That'll be interesting. This could have some, and I still have the view that I don't think that the powers that be, they're going to try to do whatever they can to keep Mr. Trump out of the office. We'll see if the cheating goes. Things are not looking good. I don't know how it's going to be difficult. I think for them, more difficult, if you will, to cheat this time, but they're still going to cheat, and we'll see what happens. I'm kind of interested just from my own amusement. Again, are themes that we are invested in the Actionable Intelligence Alert newsletter continue to do well. We had a couple of down quarters where we were underperforming the S&P, but it looks like now we've got the wind back in our sails as the Money Fest 2024 continues and ignites a fire under the assets that we believe will benefit the most from that activity. So that's it for this week, guys. We'll talk to you next week. Thank you very much.